Hello, how are you, Paul? Just let me know if you can hear me and just make sure that mic is working fine. Then we'll get up and running. Oh, it's no good, mate. A bit of a cold, a flu or something. Ah, good. All right. It sounds like we're up and running. So, yep, all right. I've just been playing around with things to make sure that's coming through clearly. Let's get going. Good afternoon, isn't it? Afternoon, everyone. There's a few people who'll be coming in bits and pieces, dribs and drabs. Welcome to Trade Setup in the live stream. We're the 24th of May. Had surgery last week. Oh yeah, sorry to hear that, mate. Hope everything's going well and you bounce back quite strong. All right, today we'll. G'day, Helen. Good to see you in. No working today. You stick with your charts. Um, Now I was going to go. So today we'll just go over the markets. Last night, not a massive move, just sort of bouncing back from the previous night. We'll have a bit of a chat about that. Not much is changing over there. I wouldn't say it's more our market that we're getting sold off at night quite heavily, and the bounce backs when the US rallies we don't really react the same, but they head south and we head south faster. So at the moment it's more that working its way off the 6150 on the ASX200, just backing off there, and it got a bit stretched into that zone. So it's just reacting off there. We'll have to keep an eye on that to see how it goes. We'll talk more about that, and I just want to cover. I was looking at a stock yesterday, Paladin. I don't know if anyone got the alerts on Telstra. Yeah, Telstra. So I just saw that, Paul. Paul and I were having a chat about it, and then I put it out as a bit of an alert. As a look, I think it's very important. I think it's a good idea. Um, just going through the Telstra chart, just talking about that a bit more, and then I happened to look at Paladin. Now, Paladin is probably a fantastic example of a similar thing. Don't fall in love with the stock or don't buy. You got to buy in it for a certain reason. Um, But if you don't know where your risk is, there's always going to be times if you don't know where your risk is, you're going to get caught, and that could be more than enough to wipe out a lot of previous gains on different things. So you can have four wins in a row, and then one loss can take out that plus more if you're not careful, especially if you're picking the wrong stocks. So I had a bit of a chat about that. Uh, should we put a put option? Yeah, that's where you. It's true. Look at probably not a bad way to attack the dividends. For example, if you're buying for dividends, you buy the stock. I mean, for I know Telstra. We'll just get the charts up actually. Telstra's a big div stock. I don't know how big it is for dividends now. I don't really follow it too much, but I just know that was a bit of a darling for everyone. But the stock, the underlying share itself, I didn't fancy it too much. Is that the right one? That's the right one. I didn't fancy it too much purely because from a charting perspective, it looked rubbish. And it has been for a while, not just a couple of months, but a few years, I think. So it wasn't the best, and also just the company itself. I mean, there's more and more. It's not what I wanted. TLS. More and more competition, so you can't see that their monopoly on the industry is going to continue. And I think that's shown in the share price and showing in the charts. PNV, I'll get rid of that. You see that? So that's your daily. So it started pretty much in 2015. That it tumbled over, so it's a good. We'll have a bit of a chat about that. I think there's a few things we're going to look at. You get more than enough opportunity to get out there as a heads up that things are contracting, especially if you're long, especially if you're long from 3 or 4. But if you got long late into that trend up, through 2013 even, by the time you got to this stage back in 2016, it was pretty much all over. We will chat about that before I get sidetracked. So I tend to do that quite easily. We'll just have a look at the markets. So the US, it bounced back slightly. Where am I? Here we go. Bounced back slightly last night. That's the S&P. The Dow is the same. Pretty much made back some of the gains it lost previously the night before. they're still hovering around that same zone we spoke about a couple of days ago. Just that when it broke up through this lower high, I'll make that thicker. That's it. Broke up through this lower high off this nice little base here. This is on the down. The S&P is the same. Broke up through the lower high, the most recent lower high, sort of off a higher low. You can call that a high low because that was a big rejection candle. Or I mean, this is really one big zone. Sort of that 23.5 to 23.750. One big zone that is supporting off there, and it just broke through that lower high there. So really for me, this is more of a washout, just cleaning out that high. There would have been a few buyers jumping in just after that, but I would expect it just to edge lower, and then I'm looking for that higher low. I mean, it could just go sideways from here. If it goes sideways and then starts building, that'll be a different story. So we just have to keep an eye on what the US is doing. That's a daily S&P. You can see is pretty much the same. Probably that is more of a higher low around 26.25. As opposed to this low down at 25.50 to 25.75. Major base. It is a bit extended up here, so that's why I'm of the feeling that it's going to be a bit of an edge backwards, a bit of a pullback, but slow grind and then just build that higher low. That's what I'd like to see. Again, just taking time. Now our market, look at that. We've pretty much come headlong into that 61.50, that sell zone up there, and you could imagine that after seeing this kind of move up for a month and a half, you've got to expect some sort of profit taking because it blasted through all these resistance zones, which potentially they weren't a resistance zone until it reacted off it. Now, just they were potential resistance up here at, what was that, 625, 60.25, up here around 60.75, and again, just up here. By the time you get to here, it's just going to probably touch on the highs anyway. But you can see it's just blasted straight up through there, no pullback, no breather, no nothing. So anyone that's bought it up here, especially when the US is the way it is, you probably would have expected to take some sort of profit up there. So if you're still hanging on, if you bought some position, or if you bought it off these lows, some nice stocks, and you're ahead, great. Just know where your risk is. It doesn't mean that they've gone the same way as the ASX, but I mean it's mainly driven by the banks at the moment. A few of the bigger blue chips. But this is more of that reversion to the mean. So what I'm keeping an eye on is that weekly. That weekly was extended up here. We might find that it's a little lower high, like we saw previously. I don't expect that big drop off off a cliff like we saw back in, when was that? Feb? Yeah, back in Feb. Wouldn't expect that, but I'm expecting more of a bit of a grind lower. You might get a lower high in here, but if we start easing lower, but we hold up on the daily, and that weekly, some heat can come out of that market on the weekly, then I'm expecting a nice little higher low and continue that trend up. Now, if you take, again, if we can just take a screen snapshot of that, this is the main thing I was sort of looking at, and it touched on, you can see bang, bang, bang. The most recent pullback was pullback there. So we have got a lot of room to move where we could easily contract. We can contract all the way back down here, still hold that trend up, confuse a lot of people, especially off that double top, and then turn around and head straight back up through 61.50. So just got to be wary that there is a lot of room on the downside that we could easily get choppy. So just be wary it could still be just continue to be a bit of a choppy market. I mean, no one quite expected after this blast down, no one quite expected it to recover like that. I mean, I certainly didn't. Especially after we talked about this, after it took out this low and it just come in line with this support zone that it was going to turn around. But, again, looking at the daily, I would have expected this probably wasn't a really nice high low, this zone just in here to trade from. So it sort of caught a lot of people by surprise. In that respect, I think it would be short-lived. So I'm expecting more. When you're looking for a good solid move up, you're looking for a good solid base to build, whereas this really wasn't, which leads me to believe that this is going to react off here and we're going to get some more chop in the near term while the US works out its problems. And the US, well, we all know the economy's growing. You've got companies that have done well. They've had the tax break. Everything's kicking along nicely. They're looking at raising rates, whereas Europe are still on hold. So they're actually doing quite well. So it's not a bad thing at all. It's just that they still have a few issues that they're just trying to work through. It's more that because it's so extended, people are just looking for that sudden shock potentially that could cause that sell-off. Whereas they're not happy to put on any too much risk, and you can see that by the last few days, especially it's popping up to the highs. The next day's down, then it's up, then it's down, because they're just not willing to hold risk for too long. To get into stocks at these highs, and it does rally, not willing to hold it too much more than the next day. Any sign of weakness, the next day, bang, they're out again. So I think at these higher levels, we may need a deeper correction in the US just to get people to a point where they're willing to take on more risk. And that's just what we spoke about in the charts with the Dow. For instance, maybe a pullback in here is going to entice people to take on more risk at that, say, 2075, say 2650, or maybe a touch higher. But that sort of pullback into a deeper correction just through the MAs or reversion to the mean type of thing to the MAs, I would think is going to entice people to put on a bit more risk, considering that the health of the economy is quite strong. All right, so that's our market, their market. Again, it'll be interesting to just see how we go, because this has been quite a good sort of reaction off those highs. So really now, if it starts turning and you get a buy signal and you start jumping the stocks, just be wary. We could be looking at a lower high and a deeper correction. It's that two moves we talk about. We've had that move up. We might have, this is the move now. We might pop up and get a deeper correction just to clean out a few more traders and then reset ourselves. By that stage, we might be closer to this weekly uptrend. That sort of catches up. It might be a few weeks till it gets there, and it might only pull back to 59.50. So I'm not saying it's going to pull back, but I'm just saying if that's the case, just be wary. I mean, to buy now is really just swinging at fresh air. All right, now that's those two markets. Look at FTSE. So they had a big night last night, and that's just because it's touched out through the highs, and then with the US sort of grinding sideways, this market quite strong. It's just taken out the highs and then retraced. It's probably going to, just where are we now? Yeah, it's just back to that sort of support zone. The DAX, what did they do? They dropped off as well. So Europe's struggling a bit. They've got Italian problems. We'll see how that pans out. I don't know if anyone's been following that. I think it's more they're more worried about, or the EU, at least Europe, is more worried about Italy going to more and more debt. They've already had a massive debt problem. I think they start loading up on more debt to get themselves out of the proverbial, then that's going to cause problems for the EU, and whoever's going to back them, pull them out of the out of strife. But we'll see. All right, let's start chucking in. I'm just going to go over that Telstra, and I just want to touch on that Telstra and PDN, but chuck in some stocks you want to take a look at. So I want to call these a bit more short and sweet rather than banging on too much, because I guess a lot of the stuff we're just touching on at the start you'd know about. You're following. I'll just give my valuable opinion. But just chuck in some stocks that you want to look at. And what I'll do is I just want to really touch on Telstra, and then I'll touch on Paladin, CBA, no worries. Now, let's just draw a chart of that. I'm probably going to be very rough with my support zone, but basically this is a weekly chart of Telstra. And you can see that weekly trend was, say it's roughly there. Well, let's make it a bit clearer. It's roughly about there. Now what you get, the market you can see that the style of this move up, it's been quite solid, and that was way back in, I don't know now, 2013, 2012. Well, how long did that go for? It started somewhere around 2011, didn't it? So, where's my... I can't grab that. I think my computer's playing funny buggers. Just let me know if I drop out, guys. I'm wondering if my computer's being a bit silly. I thought it was the internet, but it could be my computer. We'll keep an eye on that. So this is the Telstra, the up move. I went for quite a while, and you can see that it's just, it's getting ahead of the MAs, pulling back to the MAs, getting ahead of the MAs, pulling back to the MAs. This good pullback then, but it was continually holding the trend up. You just got these nice higher lows. It was all quite controlled all the way up until we started getting this big blowout through the highs. And that was back at the start of 2015, I think it was, 2015. That big blowout, and it's had a big correction back to the MAs, but what it's done is had a couple of good weeks up, and then it's just failed. And you can see, we got overextended when we got up to that 680 level. Then we had a big pullback. The market's sold into it. Then it's pushed up, and it's gone from sort of oversold to overbought. Not quite as strong strongly overbought as that previous high, but it was still nonetheless it was still overbought, and it's taken a lot of energy, and a lot of energy just to get it up to that high again. So what we're looking at, and as this pullback has come, it's not really deeper than it's probably one of the deeper ones in the past few years, apart from this little pullback here to the MAs, pretty much the same, but it's more the fact that it's once we get that first red candle, even the second one, halfway through that second red candle, things are not looking good because you've got to have in the back of your mind that that's potentially a lower high. And if that's a lower high and we start breaking through that $6 zone, why can't I draw that? Oh, there we go. We start breaking through that. I'll get that back. There we go. We start breaking through that sort of $6.590 zone, then you got to be thinking, what if this trend is coming to an end, and then we get a bit of a cool pullback? So we're going from it's trending higher on a weekly to potential contraction, at least some sort of macro correction. And by macro, we mean this has been the trend up. Oh, let's draw it probably a bit clearer. This has been the trend up on the weekly, and don't forget on a weekly, it's a strong trend. And then all of a sudden, we've got this little lower high, potential lower high starting to build. I mean, the anchor for me was way down here of this uptrend, but the problem is you can see that uptrending slope. We just broke it when we got through that $6 zone or 590, and it was definitely. I mean, if you're holding it still here, you've got to be questioning yourself. You've got to be looking at it through this zone and here at least. Um, what's going on? No, that wasn't very good, was it? Let's just go forward. So you've got to be questioning, going, what's going on here? We've broken that downtrend. We've got our lower high in place. Are we going to go into a macro corrective sort of action where it can just head south, and then from there you'd rather be out? Especially it's on a weekly chart. We're not looking at daily. We're not looking at 30-minute, hourly chart. We're looking at a weekly chart. So that macro correction is going to take a long time. So preferably, in my eyes, you'd rather be out than in. Okay. Or you're looking potentially for those opportunities to go short into that stock. So you can see here, it's changed. It's pretty much changed trends. You don't know from there. You don't know where it's going to go to. And if you're throwing a few fundamentals into that, and you're looking at, say, the story of Telstra potentially being, coming to major competition, things are just getting a bit tougher in that sector. I know they're still, and then the company itself maybe not doing as well as they used to. So that doesn't play well to, the market having a nice little correction and then building again and to taking out those highs at $6. I wouldn't have expected that. So that sort of, that price action coupled with the fundamental view was what I see anyway, of a bit of a weaker standing in the sector, or weakening standing because of competition. And then I'm expecting that to go down, but obviously you're not going to predict where it's going to go to. Who knew it was going to get down to 280 from here? But it definitely, you can see this price action. It took a while through. Well, let's just clean this up. Let me just draw this. Draw it again. Just want to get that up properly. You can see, all right. So this price action through here was more consolidating, and that's not very, that's not looking strong. And if we've just had one leg down and then we consolidate, and we're trying to lift here, say, and then we broke down from that, only really a really weak push up through that high. We've had a deep correction here, and you can see that choppy price action is pushed down. It's retested that low through there. Then it started to work higher. It only just got up through the highs at that stage, and it's had to have a deeper correction. Bit of a stutter there. So it's not showing any strength through here, and then it's popped up through the high again, and only just again, and it's had to have a deep. Well, it didn't really correct from there. It just capitulated. As soon as you get through this sort of support here, and you've broken this high low, I think after all the time it's spent trying to build back up again, and it can't, you're definitely going to be looking to the downside. And if you're long from, you might be long from $3 or $4, you've got to be questioning that trade. Okay, you've banked some divs, you've done all right. You don't want to get caught when this market is just starting to roll over, and you don't know where it's going to go to. If you're trying to pick a zone where it's going to, you're really just guessing until it starts to play out. All you can do really from there is start to go, okay, that's a support zone. It pulls up there. We bounce off there and we go through it. Okay, we'll look to the next one. there's potentially one here, and just to see if you can see some sort of price action like that, it's lifting. Okay, this might be the zone where I can potentially re-enter, and if it retests and then you start getting high lows, great. But if not, all it's doing is just giving you more and more signs. There's another sign here. It corrected up, got your lower high just in here, broken here, and then broke down again. Tried to correct. Yeah, there's not really any lower highs just in here. Probably that little zone. It retested the low, tried to push up, and then bang, capitulated again. And then it was really after that, it was just, it was just some selling as it continued to squeeze out that market. And you can see that little move up has just been coming all the way back down. So I'm not trying to guess where it's going to go to. What's that low there? 254. It's, it come all the way back down to about 254 again, 255. And we're pretty much around 270 something now. So it's really coming back into some serious lows. Whether it reacts off here, I don't know. But I mean, what I thought I just wanted to go over is that you've had a good run up over a few years, and you've got many signs if you're holding that just to get out. And you've really just got to take heed of those signs just to make sure that you're not going to take any too much heat on that trade. I don't know if, especially if you bought it late into that trend, if you bought into it around 2014, you'd rather be out. I mean, not just sitting there holding it because it's everyone's favorite sort of dividend stock. And okay, I'm going to collect the dividends sooner or later. The lower it goes, the longer you've got to hold it to collect those dividends. And what if something else, happens and it just never recovers, and all of a sudden you've got to hold it for the next 5 years to collect the dividends to get you back to at least break even. So I hope that makes sense. So I thought the other one that I was just looking at was PDN. We're on a monthly, aren't we? We're on a monthly chart. So I want to focus in on this big move up here. If I can get into it. It's more of that move up, and it was a bit the same. You had enough. I mean, we're not going to know what's happening. I mean, it's all hindsight. It's all guessing. But what you're trying to do is develop those technical. I mean, because I'll be struggling to think that. I guess your fundamental sort of style that it may pop up with some signs of when to sell. It's getting overbought. Okay, where are your targets? But I think this is where I really like technicals. It's the signs that your fundamentals are not going to show you where people are starting to bail, where what they're doing, what are the majority of people doing. So the majority of people here are starting to buy. Okay, they're buying up, they're holding. Okay, when you get to here, this market's had a good run up, and then you've got this big red candle on the weekly basis, got absolutely poleaxed, opened down, and it started to lift again, and then it only got so high as here before we started getting another couple of red candles. So that to me is saying that, okay, we are stretched. Maybe there's going to be some profit taking up here. Maybe something's happened. Maybe this overall trend is breaking down. So if we just break that down on the daily chart, if I can get the daily, yep, ooh, and just drill in on it, just to see what sort of, it's probably not the best price action. You're getting a double top here. You're getting failure, and then it's tried to go again, and then you've got this lower high building, with a spinning top, whatever you want to call it. So that's just that rejecting, it's rejecting strength, it's rejecting that move higher, it's rejecting any further buying. But buyers are really starting to run out because they're looking at this double top, they're looking at the strength of this, this capitulation through here. Pretty much over a couple of days, it went from high at 961 down to 666, the devil's number. So about $3. So what's that? 30. My math's right. 30% of that rally up has just dropped in a few days. So what it took you over about 4 days, was it probably say a couple of weeks you've lost. It took 2 months to get there. So it wiped off pretty quickly. So the savageness of that move, it's going to be a heads up. Okay, what's going on here? I've been long since $5. I'm watching it go up. I was looking really good. It got up to $9, nearly 100% gains. Bang, I lost half of that in a few days. And you got to look at that and go, hang on a sec, what's happening? Then it has another move up. You're feeling pretty good about this stage. But then you've seen all these people, for example, the people that bought it a lot higher than that and have seen themselves go from profit to losses, all of a sudden it's got back to a profit or maybe break even. They're the first ones that are probably going to react. The first ones are going to say, hey, something's not really good here. Something's not, I don't want to sit there and take another loss and find that, I've had the opportunity I've watched my trade go from profit to loss, potentially back in profit again, or at least break even. I don't want to see this go back into a loss again. So they're the first ones to bail. And that's where you get this little sell down, this little push down here, and then it pops back up. So there's some people put back on the sidelines, and then you get the next sort of wave of people, wave of traders are looking at it thinking, hang on a sec, we've got this double top now. Savage moved down, it's reacted back up, couldn't get back through the highs, and we started to see some selling again. I know that it's gone up pretty hard. I don't want to sit around watching my profits start to evaporate. I might look to say book some profits, and that's why you're getting these lower highs. People are not sitting around for too long. Then it's grinding down here, and then by the time it gets a lot lower, it's starting to attack that next level down of traders that have bought it. Anyone above that, if they haven't got out, they're really sitting on a loss now, and they're sitting there watching it and going, look, this is not going to bounce back. I'm going against the flow of it. The market's turned on a weekly basis. It's now turned down. The MAs are down. You've got lower highs. The pressure's well and truly on the market by then. And then you get that sooner or later, that's breakdown, which you saw just here. It's just broken down. The market's capitulated, and that's just that big wave of everyone just giving up the ghost and saying, oh, I've had enough now. I'm getting out of this trade. And then, of course, I mean, it has bounced. I know that. But longer term, if you go back, you just drill that out a bit, you can see that then it started doing some serious. It was a good little bounce back here, but that's not something I'd be too inclined to be buying into. I don't like that sort of structure. I'd like to see it spend some time, and I want to see more confirmation that it's a new major leg up rather than just a bounce. All right, and to me, that's just showing it's a bounce, big capitulation. You've got this high low. That's more opportunistic. And if you're looking shorter term, that's great. You've got this little opportunity to make a few points. I'll just drill back. Whoops. Now, I've really stuffed that up, haven't I? Get back here. We go all the way back here. So this is the bounce. That's the capitulation there. And then we got this little high low starting to bounce, but you're sort of against the swing of things on the daily. And you're just looking for that short term, maybe a bounce. If that's the case, great, you've got it. You made a few bucks there. As long as you really manage your risk well, and by managing your risk, I would suggest that if you're trading it higher, let's just draw that. You're trading it high, you'd probably be looking at that sort of trend up there. You might have bought it somewhere around here. Your risk was initially here, then you moved it to here to break even. Then you could just drag it up. Potentially about here, definitely you should be out, and you probably had a small gain there, but you would have been looking potentially just up here to take some partial. You might have locked in a good little partial. What's that? So 5 to 7, a couple of bucks. So that's pretty handy. Was it 5? Yep, $6. So it's just under $6, nearly 8. So yeah, about a couple of dollar gain on that. So it's quite handy. And then if it's just dropped through there, you just bail. Okay, you bail on the whole position because you know that longer term trend is still down. It's really starting to fail now. And then you get the next wave of, we go back to the weekly, that's next wave of selling. Okay, does that make sense? So you've got this big move down here, but it had a good little bounce, good solid bounce. So on a weekly chart, that's a major lower high. And then you're just starting to get a complete sell off there into where we are now, about 14 cents from $9. So I thought I'd just touch on that because when you drill it down, if you're looking at that trend going up, if you bought into this, whoops, if you bought into it somewhere here, when this was really looking great, I mean, that's a beautiful, beautiful setup. So you can see the market sort of had a bit of a kick on, pulled back to the mean, reversion to the mean, retested, and then started to lift again. You would have got an entry here on the daily. You get a good drive up, bit of a correction, reversion back to the mean in the longer term. Then you can either, you add into the position or you re-enter into position up here. Then you've got a good solid move up. And by this stage, things are not looking right. You've had more than enough opportunity over here just to say, hey, hang a second, something's not right here. Let's bail and lock in the profits. If I'm wrong and it turns around and head higher, it doesn't matter. You can't go broke taking a gain, but if you're right and there is some selling coming into it, you either look to reset if you really believe in it, or you just bail. You're just sitting on the sidelines watching the action play out, not putting yourself in any more risk, and not having to deal with those big losses that come about. And it's a lot easier. I mean, mentally, it is a lot easier to be on the sidelines watching something when you've taken a profit. If it's heading against you than being in it. And sometimes, admittedly, it can get a bit hard when you see it go on without you. But if it goes on without you, which have happened many times to me before, it's probably because you just bailed at a certain level rather than watching the price action. The trend hasn't actually changed. So at this stage, there's a good chance that trend's changed. You bailed and you just don't know where it's going to pull back to. So I thought I'd touch on that. Any questions there, guys? I thought that would be quite interesting in lieu of the market at the moment. What's happening? Otherwise, we'll just rip into these little stocks you've got on your CBA. We'll start with. Anyone trade Paladin? I remember back in the day when it was rallying hard, everyone loved it. I mean, people still love it now, but they're sitting on. Oh, I can name quite a few that I've known some, ex-brokers and traders that just loved it. They fall in love with the stock. They love the story. It's more the story they're falling in love with, and once you commit to it, it's really hard to pull yourself back. And that's where your risk management it's all good to fall in love with something, do all your research, you really like it, blah blah blah, but you've always have to have some sort of risk management in place, and you have to respect that. If you're wrong and it goes on, that happens. But if you're right, you've taken your risk and it has that good pullback. And like Paladin, it really never comes back again. You'd be thinking you're lucky stars. And I think the amount of times that it goes on without you is going to be less, is going to happen a lot less frequent than the amount of times that you saved your skin or saved your bacon or saved yourself some money and heartache. I hope that makes sense, guys. Anyway, not now. Good on you, Helen. All right, let's get into it. CBA. That's my little sermon. And in saying that, let's look at BPT. I won't lie to you. I did get out of that. I'm out of BPT, and that was because it's up in the resistance. But I couldn't help myself. I'm second guessing it, which just what I tell everyone not to do. I did second guess that, thinking it was going to have a bit of a pullback there, but we'll see. So I'm really hoping. So I look good. That it actually rolls over from here and reacts lower. Otherwise, it's going to look a bit silly, I know. But we'll see. So CBA. Yeah, I don't like that at the moment. Two things on CBA. You've got to sort of forget about. For me, the whippy price action is daily. This is moving down, and the problem with this, we all know it's moving down. It's moving down off a major lower high at say 88. So this is a very important sort of key zone where it is at the moment. If it can't hold up here, I think it's gone. CBA on the 1 minute. FX, it got ahead of itself, did it? So with CBA, if I wanted to buy this, wouldn't touch it just yet. It is in a zone. It's in a little zone through here. If we could just look at that, it is in a zone through here. I mean, that you wouldn't take that as a breakout, considering the major price action. We've had the big move down here, touched it a fair few times before it lifted, and then we've had this. That move is still going, but look where we are. The last, I don't know, few months, isn't it? We've been oversold, so it's taken a lot of energy and it's going to take a lot of energy to probably break through there. Now, if this is going to continue to lower levels through 70, I'd suggest this is going to wash out that level first, have a good little correction up, and then it's going to build another lower high and potentially continue this trend down. So on the long side, you might get some, but I wouldn't be looking for this to hold it, buy it, chuck in the portfolio for the long term. I'd be more looking at this, off a daily chart and see if you can get that grind higher back up somewhere around 70 up to 78. And then I'll be questioning that potentially, is it going to be a lower high on the weekly basis, off a daily trade, or is it going to break up and through and having to reassess it from there? For longer term, you really do need this to hold up, that 70 zone. So if that's going to be a washout through there, you need it to, well, let's draw that a bit better. I'll draw it over here. So that's our support $70 zone. We've just come into it. I want to see that lift. I want to see something, and then I wouldn't mind seeing a retest, maybe, and then some more high lows off there. So I just think this is going to take a long time. I don't think it's just going to go down, up, and continue a trend up. That sort of V-shaped reversal. Wouldn't expect that at all. Good. Yeah. There's just too much pressure in that market for whatever reason. I know they're having a few issues. And don't forget the bigger portfolios, if they're under the pump from, the bigger funds, they've got a lot to get out of. If they decide to close the position, there's no ifs or buts, they'll close it, and it's going to take them a while to close. And then what's going to support the stock later on, it's not your retail traders, it's got to be when they're coming back in again. I think that's going to take time to play out. If they did get out on the way up here, if they're getting out on the way down, I mean, who knows what they're doing? I'm only speculating from here, but I just think that that's going to take a long time to start to play out. You've got to factor in probably weeks or months for it just to hold up off support. And then from there, maybe 6 months to a year down the track, it's starting to recover off the weekly chart and it's becoming a buy again. And then you get that longer term trend back up again. But definitely that macro view is not looking good. That's not looking good from that high. Bought up off that zone off 70, bounced, made a major, and I'm talking major lower high, and it's just pressing down. So this could easily, if you take that distance, could press down. What are we saying? Somewhere from 88 up to 96, another $8 down. Could go to 62, easy. 62 bucks a share if this just before it starts finding some buying support. But on a weekly chart anyway. I hope that makes sense. But definitely, I mean, if it's gonna be supported off here, it's gonna take some time. So this is one that's just sit on the radar. Or maybe sells, if you want to, if you're desperate to enter it, use options, sell some puts, get some premium. And if you're wrong, they expire worthless, you've made some money. And if you get exercised on them, say you sell something at 67, okay, you've bought a partial position at 67 bucks. Because banks, they're going to recover sooner or later. And you bought a partial position at 67 bucks to maybe sell some more puts. And if you don't get exercised on them, so you want to sell them in a zone. It's what Buffett did, didn't he? I don't know what stock it was on, but he's famous for that. He wants to sell those options at a level that he's happy to buy the stock. And if it doesn't get down there, if they get exercised worthless, if they don't get exercised and they expire worthless, he's made some money. He's made the premium, and he just keeps doing that. And if all of a sudden he gets exercised, okay, that's where he's happy to buy. He's buying his stock, and then he just sort of puts it in his back pocket and sees what happens. And then if he's right or wrong, and see if it does continue higher. That's probably another approach you can use for the banks. What do we got? What's next? Race down. All right, John, let's get into SYR. So that's not looking too bad. It's very early days. And this is off the weekly. It could be sort of rangy. To me, it's looking rangy anyway. So you've obviously got the big sort of zone up just above 6. Then you've got another, zone. It's bang, bang, up to the top, washed out the previous high, all the way back down to the lows again, washed out these lows just here, and it started to lift. Potentially you've got a lower high. If that's a lower high, that's going to press down, back down to support or through support. Or if not, that's maybe a secondary move. I just don't like the way this has come screaming down from $5 down to about 325. If this is going to be a high low off this major key support at 250, it has to do a lot of work. I expect to see it do a lot of work, and I think the key for me, the anchor to this move down, is just below 4. So that's the anchor just in here. So it could do what it wants here, could chop around. I don't think it's going to be in a longer term uptrend up until it breaks there. And so for me, it's had that push down. We've popped up. We've sort of just gone down to here. That's my anchor. I really have to see it. If I just change colors, but I have to see it break up here, and then I want to see this type of price action, see if I can get some sort of entry off a higher low or something like that. But again, we're looking at the weekly chart. It's probably going to take some time to play out. But up until it breaks that anchor there, to this pressure is still on the downside. And just look at the moves down. That move was quite savage. It tried to go up, and then a couple of days, bang, straight back down again. So whatever it made up in these couple of green candles, a couple of weeks, it's pretty much given it all up, plus a little bit more. And it's fine some buying through there at around, say, 320, 310 to 320. It's fine some buying in here. It's just starting to lift, but that's not convincing. You can look at that couple of green candles, a red candle, green candle, red candle, couple of green. It could be the next week, could be just negative on it. So to me, just looking at that weekly chart, it's not convincing. We may head back down here. We may test that, 250 zone and start working its way back up 250. And that way, maybe you could look at it as a bit of a range trade. Maybe this is you've had this move down, we reacted up all the way back down. It might be what we're just doing here, just in the midst of working our way back down to 250. But yeah, the difference between this kind of price action, what we saw, and what we saw here, this started to go a bit more vertical. The moves up were quite good. Good sideways, good move up. gave it up a bit, retested, reacted straight back up again, strong reaction up, good reaction down, but then the reactions up started getting a bit stronger, and the weakness, the reactions down were a bit weaker. So that was quite good. Let's just look at the daily. That actually doesn't look too bad, except I still think we're up against that 390 zone on the daily. And that's because of the weekly trend doesn't look too convincing. And this is not convincing either. I think definitely down on the daily. What was the weekly? The weekly's actually, the MA's nearly crossed over on the weekly. It's, there's weakness there on the daily. We're starting to get some buying potentially coming in here, but this could actually just go, a bit like this. I'll just capitulate. Buying coming in here, just go boom, straight down. Take out that $3, head down to 50, and then it's all over. So just keep an eye on that one. APX. What are we on there? Okay, that weekly's up. Nothing really to argue about that. The key level for me on that weekly chart is around that 850, 60 zone. That's the most recent swing point, high or low. It's pushed up through $11, but then you can see that was more a wash out of the highs, because look at that red candle there, that big week there, just bang straight down. A little spike in that negative volume as well. You can see up to 4 million. Bit of a spike over that week, and it was just that. It's, for me, I don't like to see that if I'm expecting a higher move. And don't forget, look at this move up. It really, since way back before 2016, 2015, it hasn't really looked back. That trend has been holding, and it's been getting a bit more vertical. So sooner or later, you've got to expect heat to come out of that market. And if we're not going to go on with it here, maybe this is the zone where we get a bit of heat coming out of this market. And if you go drill it down to the daily, if I can move my mouse, if this is a lower high, I mean, it's the daily's looking a bit better. We just washed out that, but we pulled back. We built a higher low again. I just don't like when you got these little red candles. I would rather see, if I can just, I hate it when that happens. It's still clear, isn't it? I don't like the way it just goes bang straight back up. I would rather see if it's going to come down, start, contracting a bit, and then you get that expansion up out of contraction. And that's just dragging a few more buyers. It's some more positive buying support, and I think you're going to get those better reactions up. The fact that we've only just, I'll take that one step back. We've only just washed out that high previously. We've reacted off it. We've built a higher low. I know we're still holding that trend up. We're squeezing into that resistance there at $11. Now, if that fails and we fail through 950, that whole trend could be in trouble. And then you've got to take a step back to that weekly and say, okay, well, maybe this is starting to roll over. That uptrend is starting to fail, and we're going to have more of a macro correction. It's probably be the first macro correction on the longer term, and then you might get something like PDN or something like Telstra, a big move back down to $3. You don't know what's going to happen, but the fact that it's looking like it's running headlong into a bit of trouble up here. I could be completely wrong. This on the daily, this little move, this couple of days back down, can move straight through $11, and we're on up and on again off high lows, showing some strength. But you want to see that start to accelerate. I just wouldn't bank on buying it through $11 for me personally. It's just showing a bit of weakness there. I'd rather see it have a bit of a pullback. I want to see, building just like we said. Where was it? Sort of in like that. I want to see that. And then what I'm doing, there's two things. It's coming back. It's a deeper correction. It's resetting itself, and it's spending some time, maybe a few weeks to a month, resetting itself. It doesn't have to be that long, but rather than just a few days down and then bang, it takes 2 days to turn around and head back up again. I don't want to see that. I want to spend it some time, show me that, okay, if there was going to be selling pressure, it should have come in by now, and it hasn't. It's starting to be met by some buyers. Buyers are starting to lift again. It's a good sign. Plus, it gives you a chance to really minimize your risk, and you're not going to take on too much risk to see if you're right or wrong. All right, what was the other one? I hope that makes sense there. GSC. Now, where did that come up? There we go. The GSC is pretty much global geoscience. It's only 100, so it's not trading. You be wary. Something that's driven up so quite hard over a good few years. It's not doing high volume. These things could, you know, if people bail, it's going to be hard and fast. So for me, I would again, similar type of thing as what we're just looking at APX is maybe just keep, if you're in it, great. If you're in it from back here, just tighten up your risk, potentially tighten up to below 45 or below 40 if you want to give it a bit more room. Let's just see. Just want to see what's going on here. Let's just quickly draw this up. So look at that. It's squeezing on that support zone. Now, if we get a lower high and it takes that, say 45, I think this uptrend's over. You got lower highs in play. The market's squeezing down. Sellers are starting to take control. Then you first thing you'll be targeting 40. If it doesn't react off 40, if it doesn't go sideways from here and start building again, then this thing could really have a pullback because you're going to, referring to the weekly. Oops, it's gone up quite. It's gone up quite strong. Come on, little mouse, pick the right thing. There we go. It's had a good move up. Good few weeks up here. It corrected, reversion to the mean, accelerated up again, reversion to the mean. It's tried to pop up, but unlike this, we've taken out the highs without a red candle. Taken out the highs without a red candle. Pretty much in 1 week, boom, straight up through, ground its way up, straight up through the highs, ground its way up here, straight up, didn't get through the highs, and then we got a couple of weeks down. Trying to consolidate here, but it's sort of that. I'm not saying that the trend up is over, not at all. It's more that it's starting to run into a few issues up here. Maybe some profit taking. The more that profit taking comes in, the less likely this is going to head higher. Or the more time it takes without spiking up and through, then yeah, it could be running out of steam. But we'll see. If I was looking to buy it, look, honestly, I probably wouldn't buy this. It's probably just me, but I wouldn't be buying it with a break up through those highs. I think it's just taking on too much risk late into a trend, considering the backdrop of the US, what our market's doing. All right, EML. Now for me, geez, I'm negative on these, mate. Sorry. I'll show you why. It's more the weekly. The weekly I don't like. The daily. If you go back to the daily, this is more of a grind higher. It's more of a correction. This leg down, we're more correcting that leg down, and then which generally leads to another leg down on the daily. And look where we are. We're getting extended up here. We're stretched, going from oversold to overbought. It's taken a lot of effort to get it not very far. It means that selling pressure is still in there, right? Even if it just from here, there's sellers take control again, it only gets down to 110 before it bounces back off, and then you get another big wave of buying pressure. They're all stepping back in to push it back up or try to support it. But until you get that, for me, the selling still coming into this market. There's still, whoever's been holding it up here, if they're still holding it up here, they're in behind the 8 ball. They're getting sick of holding it. They're wasting their time, wasting their money, and they think if it starts rolling over, I'm out. Now, if there's enough of those people that just really cream the buy, as I say, that are lined up, this thing could head through 110. But in saying that, the more the reason why I don't like it is more that, you couple that price action, what I was just talking about, with this weekly chart. Yeah, I do that all the time. Let's just get rid of that. Take that, screen snapshot, bigger chart. Away we go. Now look at that. So up until here, it was always looking good. You had move up, pull back, move up, right up to these highs, pull back, a deep correction. It sort of squashed right back in, but that was your anchor at that time of this move up. Deep correction, found some buying, started building back up. You can see that high, low in here. Great. Okay, come up to the highs, longer term, washed out the highs, and then we've got a major lower high there. So it's pulled back, accelerated through the lows. But what it's done with this move down is just broken the anchor. So that, for me, is very negative. I mean, I know this market could head higher. It could get up to 160. Anything could happen, but that weekly price action is not very good for me. I don't like it at all. If you're still on a daily basis, if you're looking at it on a 5-minute chart, I wouldn't be buying. I'll be looking for a bit of a correction, a lower high to form, and I'll be looking for a sell opportunity. The fact that it's on a weekly, you've got some room to move if you do buy it. But again, I don't like that price action there. Does that make sense here, guys? So you got last time you overbought up here on the daily. It pushed up into overbought territory, had a little correction down. We've gone back up to overbought territory. So if you're going to get long, and this is going to take some time to put on 30 cents, is it worth it? With that the backdrop of that really crappy looking weekly chart. So this could be sending the market all the way down, heading back down to support around 60. You don't know what's going to happen, but it's just not looking the nicest sort of a chart at the moment. Whether or not this move down here has cleaned out a lot of these buyers. When you're getting back down to 110, last time it was at 110, not even here, it was somewhere around here, the start of 2016. So all these buyers through here, if they're still in, they're underwater, and they're waiting for an opportunity just to get out to ease the pain. Or, if somebody's out, would you really be looking to buy in it just at this level when it's just taken out this zone through 150, pull right back, it's grinding its way back up, it's struggling to get up, it's not showing any signs of buying pressure, more selling pressure to me than anything else, which could lead to it taking out this 110. You really want to see it do a lot of work, as in retest the zone, maybe retest down to 120, potentially. You can see that was that low 116, went down to 105. If it sort of grinds high and it comes back down and retests this low, that was a washout, and it starts building again. Maybe that's going to be the trade higher, but we'll see. It's all about time. It's going to take some time to work out. All right. I hope that made sense there, guys. Any questions just on that? Just what we're discussing there? If not, we might call it a day there. It's not really any shorter, are we? We're not really saving any time on that, but there's no questions. Thanks very much for joining me. I hope that was useful, and I hope just what we're talking about, with Paladin and Telstra and some of these other charts. I mean, again, if you were looking at this and you bought it somewhere around this zone, this is EML still. You bought it in this zone. You had a massive heads up of a lower high around that $2 zone to get out. At least take you lick your wounds and out. I mean, you would have been thinking yourself if you're holding it still. But yeah, you can see. Look, if we drew that up, just as a bit of a, I just want to draw up that move up. Look at that. So that was a massive heads up to bail, especially just putting your stop there, stopping yourself out at 170, calling it a day. Even if you bought it through 180, you only made 10 cents loss. Is that a big deal? In hindsight, not at all. All right. I hope you took some value out of that, guys. Any questions, feel free to email us at support@tradesetup.com.au, and I'll get back to you. Otherwise, have a great weekend, and we'll be back in on Monday at 12:30. Cheers, guys. Bye.